India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Well, good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Friday, finally. We are there, end of the week, finish line, whatever you want to call it. And the last 2 days have looked a little better. So can we actually build on that in some shape or form? That's the hope. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi. Morning.
Hi, morning folks. Happy Friday to both of you and happy Friday to all our viewers as well. You know why the smiles are really wide. But I think there's one thing the week has taught us. I mean, global markets have managed to get over Trump. The executive orders are coming, the announcements are coming, markets have been generally higher. There's some semblance of, peace and, calm. I don't want to jinx it, but across global markets. So I think we're left with dealing with our own issues and our own cues here now.
Well, and I'll tell you what, enjoy the weekend, guys, because next week, we normally talk about a truncated weekend. This one is going
Extended.
to be a 6-day working week, so brace yourselves for it.
First of Feb budget.
Yes.
Right?
Saturday budget.
So
Yes.
It's going to be a lot, Trump goes out and budget comes in that sense. But, well, there's always something, right, for markets to chew on, stew on, whatever you want to call it. But it's looking better. I mean, global markets, etc., have looked settled down. I mean, at a high level, if you think about it, what's played out since the swearing in, since the oath taking, since actually Trump has been in office, is the fact that he's kind of acting more presidential. We've not seen anything rash, big, nothing on day one. So what we were talking about, peak Trump before, and once he's taken office, at least so far, he's been, businesslike, more businesslike than anything. That's not to say that all of this stuff that he said will not come. It's just that so far how it's played out is buy the rumor, actually sell the rumor, and then kind of sort of buy the news. So the reverse. Let's just quickly take it from the top in terms of where we left off things. So U.S. equities higher, 0.5% on the S&P, Nasdaq about 0.25% up. U.S. 10-year yields were up about 3 basis points. We left off at about 4.65. I mean, again, very small changes. Dollar index is there, I mean, at about 108.14. Oil was the one which actually sold off, and sold off meaningfully, about 1.5% lower to just under $78 a barrel. So President Trump gave a virtual address at the World Economic Forum in Davos. This was our time yesterday evening. And I just want to put out two things, and we'll play out sound bites, etc. as well. He sounded pretty, at least to me, very sanguine about the US-China relationship. He essentially said things like, we just want the relationship with China to be fair. We don't want it to be phenomenal. We just want it to be fair, nothing more. And we said, well, I already have a pretty good relationship with Chinese President Xi, and we just want a fair relationship. That's it. Actually, he sounded, if anything, much more harsher on countries like Canada, on the European Union, where he kind of sort of went on and on about various things, including how they should pay more for NATO. So that was something which was pretty interesting, and it kind of does you get the feeling that maybe it's not going to be as harsh as he sounded about China during campaigning. It's going to be much more. It's more negotiation rather than putting tariffs and then trying to work out what can happen. Now, the other one which stood out was that he demanded OPEC to actually increase production, lower prices. And these are actually sort of two things he's got kind of direct control on, some amount of influence really on. He also spoke about the Fed and how he wants lower interest rates, but that's kind of his pet peeve all the way in the first term as well. I'm not sure how much that works out. Now, today, just to sort of talk about central banks, you've got the Bank of Japan, which is expected to increase interest rates by 25 basis points. The governor of the Bank of Japan, 10 or 15 days back, actually gave markets that hint, and that kind of sort of priced in pretty well. The only question is for how this feeds into markets is if this hike will feed into a stronger JPY. Because if that is the relationship which works out and the JPY strengthens because there are other variables as well, then you actually start to see a little bit of maybe risk off because of the role of the yen as a carry trade. But I'm not very sure if that will really happen. Now, for the market here, as I said, repair and recovery at the margin a little bit. Broader markets did well, and it's been basically one-way sell-off for the last many days now. Indices, the small and the mid-cap indices were up between 1% and 2%. And we're just sort of taking it step by step. Yesterday, the hourly averages were taken out. Today, we'll see, if there's enough in the tank for the market to take out the swing highs. Maybe not today, but that's the next logical near-term level. 23,426 is that number. And of course, the bank Nifty needs to take out the swing high of 49,650. These are nothing but Tuesday's highs, and the market needs to climb back above it. The Nifty bank actually ended lower. The Nifty did well, and of course, the broader markets did much better as well. GIFT Nifty will give you a sense of how we are likely to start. It's about 48, 50 odd points higher, and of course, there's a slew of earnings reaction, single stocks, which will be in focus as well. Surabhi.
Absolutely. It's a sea of green across Asian markets this morning. And the markets have been doing well. Even the US market indices are up between 2 to 2.5%. If you're looking at the four trading days this week, oil is down almost 4%. That's NYMEX oil that I'm talking about because of everything that Donald Trump has been saying. Actually, before I talk about the rest of the cues, let's play out those sound bites from the World Economic Forum. He made two very important points. One, he's saying that interest rates have to come down, not just in the US, but around the world. And the second, he's saying the price of oil needs to come down. Let's listen into the US president, and then we'll get you more.
Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over, the progress that you're seeing is happening because of our historic victory in a recent presidential election.
So price of oil should come down, and that's how the war is going to end. And interest rates should drop, not just in the US, but all around the world. Everybody should follow the US Fed. Okay, that was the speech from yesterday. Anyway, to talk about the moves over here. Now, despite those comments, it's not like there was a big slide in US yields or the dollar. Those are pretty range bound. Talking about the important events and things to watch over here. One more point from the US. The president yesterday also signed an executive order on cryptocurrency. So watch this space carefully as well. He's pro-crypto. Yesterday, there was an order signed for the development and regulation. It was more regulatory policies and how to sort of streamline the market rather than anything very specific. He did say that the US wants to set up a national digital crypto stockpile. So, let's see what comes out over there. The cryptocurrencies were range bound, not too many wild moves after those announcements because they're on expected lines. Let's come to Asia. We've got a couple of updates over here. First is Singapore has moved to ease policy in some way. They don't cut rates. What they do is, currency intervention, and they have lowered the trading band of the Singapore dollar this morning. That's the Monetary Authority of Singapore. And of course, the big one is going to be the Bank of Japan. Even today, the inflation numbers that are coming out are fairly elevated out of Japan because we've got the core inflation number, and at 3%, that's the highest we've seen in almost a year and a half. So the wide expectation is that the BoJ is going to cut rates it's going to hike rates by 25 basis points, so watch for this. Now coming back to the cues here, again for us it's been a very, very range-bound week. At the headline level, the Nifty hasn't moved much, 0.5% up and down around the flat line. That's what the week has been so far. But the lows were tested and then there was a recovery from there. So last week's low was 23,046. This week's low, there was that middle of the week where we breached last week's low, went down, but then there has been a recovery and the bulls will hope that at least continues. In terms of flows, well, not much different to report. Once again, selling from FIIs, almost 5,500 crores. Domestic institutions buying about 3,700 crores. Lots of earnings in focus. We'll talk about this as we go along. It's a mixed bag. Yesterday, the mid-cap IT space rallied big time. Let's see, because today's mid-cap IT numbers are not that hot. Dr. Reddy's is also mixed. They have a problem with the US as the generic version of Revlimid starts tapering off. So that's showing up. There's margin pressure there as well. On Ascent, like I was saying, the numbers are not as great. They've actually cut their guidance as well. So yesterday's, fanfare on mid-cap IT, whether that continues or not today, we will see. Amber is a very strong set of numbers. They have been filling up the channel inventory on room ACs ahead of the summer season. Numbers are looking very, very good. And United Spirits has ended December on a high. Yesterday, Mangalam was telling us about maybe 9-10% volume growth in their prestige and above segment. It's even better than that. Even the popular segment has done well. So I think the December cheer is rubbing off, at least USL for sure. But we will see, Nigel. What about the overall market setup? How do you look at it?
Well, just since you spoke about a couple of sectors and segments out there, I'll tell you what, I was looking at some data with regard to steel, cement movement via rail. That is slowed down. If you're looking at power demand as well, it's slowed down as well. So January actually has been a soft start on the economic front. So we'll have to see some action both from the government of India as well as from the RBI. And that's something that the bulls will want to latch on to.
And today, a big steel number for you as well. We'll watch out for this one as well.
Indeed, but that's more backward facing, right? You'll want to hear the commentary and understand what's going ahead. But let's focus on, a couple of data points. There's close to around 6 trading sessions, or 5, including today. And the bulls, they'll want to keep that 24-year record intact. What is that? We haven't seen 4 straight months where the Nifty ends lower. And that's, we appear that we're on course for that, 1.9% lower as of now in the month of January. So the bulls will say, well, we have got close to around 6 trading sessions. We want the Nifty to pull back close to 2%. That's approximately 400, 425, 450 points or thereabouts. So the bulls will want to keep this 24-year record intact, which means effectively that we do see some kind of pullback from where the last time around we saw this was in 2001, when we saw 4 straight months that the Nifty ended in the red. The good news was that yesterday there were first signs of short covering from the FIs, both on the index futures as well as on the stock futures. So yesterday, in fact, you did see on the index futures short covering being seen out there. On stock futures as well, there were some shorts that were covered. And you want to see more of the same because they have been stacking in the shorts into the system. The options data comes up in the screen, the 23,000, both the 23,400, 23,300 call, both of them were fairly active, which gives us the broad levels that we're looking at. Support comes in at around the 22,900, 22,950. Remember, we almost visited that earlier this week twice, and we bounced back from that. So that's a very, very important mark. On the upside, you're expecting some resistance around this 20 DMA mark, which comes in at around 23,550 odd. In the near term, going by the options data, going by the technical levels, that's the range you're looking at. The Nifty Bank yesterday ended mildly lower in yesterday's trading session, but the good news yesterday was it made a mildly higher high. It made a mildly higher low as well. So you'll want to see more of the same even on the Nifty Bank because that holds the key going by its weightage. One stock that I'll be looking at and comes out with a set of numbers which has been a rank underperformer is SBI Cards. That one, in fact, year to date on the last 1 month or so, it's actually done a relative outperformance. If I look at SBI Cards, that's over the last 12 months. But in the last 1 month or so, you have an outperformance coming from SBI Cards. Keep an eye out on this one. It's seen some bit of consolidation for the last few days.
Nigel, thank you very much for that. More stocks coming up as we go through the paces over the next 2 hours or so.